Stocks are headed higher here today, but our next guest says we might see a pullback of 5 to 1%, 0.5 to 1% since the earnings season gets underway. Jeff Kleintop helps oversee about $279 billion as chief market strategist at LPL Financial, joining us now from his firm in Boston with more on the forecast. Hi, Jeff. So we've seen this happen the last couple of earnings seasons. Stocks selling off right as the earnings season gets underway. Why are you fearful it'll happen again this time around?
That's right. We think another 5 to 10% pullbacks in the cards. Well, one of the reasons is we followed the same pattern that we've seen in the last quarters, a run-up leading into the earnings reports, suggesting investors are expecting very great results. No doubt results will be good this quarter, probably up 36% year over year. But will they be better than expected? I'm not so sure. The pre-announcement ratio, meaning the companies pre-announcing negative to those pre-announcing positive results for this quarter, was a mere 1.2. That's a very low number. It's historically 2.1. That corresponds historically with a 6% decline during the earnings season. Expectations get too high going in, and although the results are good, it may not be good enough to satisfy the market.
So, Jeff, we're talking about simply the bottom line here, but, you know, the stories in recent quarters have been what companies have been doing to meet that number, right? They've been doing a lot of cost cutting and margins have been in focus, but it's really been a problem with revenue growth. So if we see a substantial improvement in revenue growth, sales increasing and showing a lot of momentum, I mean, could that keep bullish players in the market?
It might, Lori, but it's got to exceed expectations. Already, we believe the market's priced in a 10% year-over-year growth in revenue. A lot of that coming from the financial sector and materials. Remember how commodity prices have leapt over the course of the last year. That's contributed to those results. But will we see really strong revenue growth outside of those areas? One area at risk, consumer discretionary. Those stocks have run up tremendously. Look at what the retailers have done. Consumer spending has been strong. Will it be strong enough to satisfy investors who have already bid up those shares? That's what we're concerned about. It's one of our many concerns going into this earnings season.
Alcoa, of course, the traditional kickoff to the earnings season quarter after quarter. Is it going to be a tone setter?
Yeah, Alcoa is such a unique company. It's often looked at as a bellwether. It sort of kicks off the earnings season, as you say, but it's very unique. The aluminum markets, even among all the metals companies, is actually very unique compared to maybe copper and steel and other metals. So no, I don't think it's a tone setter or bellwether necessarily, but certainly shapes the market's perception of what's to come. So a disappointment from Alcoa tonight could be the catalyst for that 5 to 10% pullback.
So how key of a factor will earnings be in the whole picture of fundamentals working, you know, that's been buoying the stock market for the last year, right? Because even though stocks pulled back the last couple of earnings seasons, they rebounded right back, and we're back at Dow 11,000 already.
Right, and I think we will get a rebound after this pullback as well. But earnings are incredibly important, as you say. You know, most of the gains we've seen in the markets over the last year have really been driven by valuations rising, the price to earnings ratio going up. It's really only now that we really start to see kind of the heavy lifting done by earnings now that PEs have risen as much as they typically do in a recovery. Now it's all about earnings growth, so these companies have got to deliver on you know, in front of very high expectations. So we'll have to see whether they're able to do that.
All right, many thanks. Jeff Kleintop, chief market strategist at LPL Financial, setting us up for the earnings season, which is about to get underway after the bell today.